Obviously, the Rockefellers are making this move as an environmental one, but also from an investment standpoint, this also makes plenty of business sense, doesn't it?
Yes, good morning. Yes, it does. The thing is that, we're starting to see a lot of these oil companies, gas companies, just anything fossil fuels right now, especially in America, making a really nice peak. We've really seen a lot of refining margins hitting their high. We've seen production coming from U.S. domestic crude oil really just pushing higher and higher. And, it's one of those things where their timing for it is not only for this climate change, but obviously for the markets. You've seen a lot more people getting out of the commodity sector right now. So this really is not a big surprise, but also a really good move for them.
Talk to us a little bit more about why oil majors are divesting all these assets right now. You mentioned that a lot of fund managers, commodities funds, or hedge funds are getting out of commodities. What comes to mind is the news last week that CalPERS, the California State Pension Group, is also getting out of hedge funds, who obviously fueled a lot of the commodities rally. Why are oil majors divesting these assets right now?
Well, everything's cyclical, and right now what we're seeing is this cycle in oil and energy that it's kind of hitting its peak. And it's from here we could probably see it go sideways for a while, whether it's from the equity side or from the commodity side. We're not seeing a lot of volatility here. For the last couple of years, WTI or crude oil here in America is kind of stuck between $90 and $100. We've had our moves up and above and a little bit below, but that's kind of where it's at. So right now we're seeing a lot more stability, and that's what's really just kind of causing this lull in the market. From the equity side, there's not really a lot that's going to happen that's going to change over the next few years, unless we see some kind of big boom out of Europe or possibly China, or even a Keystone pipeline, something like that to happen. But until then, we probably have a few more years where we're going to stay here in this level. So it's better for these investment companies or investors to get out now, make a profit that they've seen rise over the past few years, and wait until we see that next big boom.
Why aren't we seeing more scarcity from the supply side? With everything going on in the Middle East, the rise of Islamic State, why aren't we seeing more of a crunch on prices from supply?
Well, this is oil independence in America. This is what we strive for. And that's one of the other things that I just don't see there, or I don't think that we're going to see a lot more divestitures out of oil and energy. It's too important to America right now, not only for the security of America and oil prices, but it's a really big factor of growth. Right now we've seen job growth explode in the oil and gas industry, but we've also seen manufacturing costs come down, margins go up, because we can afford our own energy supply now. So it's really important that we see this continue, but that's a lot of reason that we're seeing these prices not so much affected by geopolitics, but more now macroeconomic.
And so, Carl, if oil majors are divesting assets, selling off things such as refineries, if wealthy individuals, if philanthropic organizations are all getting out of these energy assets, who's buying them?
Well, I think, it's becoming more of an American sport. It's really about the people who are buying into it right now, or the American investors, not so much the big fancy players like the philanthropic, or like endowment funds or hedge funds or philanthropists. We right now have Americans investing in America, and that's one of the good things. It's interesting that we're not seeing a lot of foreign investment here anymore, because right now America is just simply about America. So you're getting more people here involved in it, not just from the work side, but from the investing side. Not so much a speculative play anymore, but more of a growth play. Right now, oil is becoming something similar to the McDonald's of America. We're seeing more money put into what we use.
Can these large divestitures really impact the price of these assets? I mean, to what extent have you seen prices take a hit from all these philanthropic funds, from major oil companies selling off?
Well, there's the hype. I mean, it's like everything like Alibaba. There's the hype right away that hits the market, and everybody's scared because everybody's selling out of them. But we find we find it leveling off quickly, and we find more investors trying to find a good deal at the bottom. I don't think that there's a big move to the downside expected for the energy sector, but we're also seeing some kind of seasonal plays here too. A lot of energy companies, sort of go into a little of a lull as we go into winter. But, at these levels, at these prices, I think we're going to see a lot more investors finding a good value here.
Are we at a bottom at these prices?
I think there's a little bit more to go. Like I said, seasonality, usually into the end of the year, we're seeing stock prices just kind of ease off because the energy sector kind of eases off in the winter. But I think that more people are thinking that the future of America, the future of oil production and refining production in America has a really, really bright light ahead. So I think that we'll see the bottom soon, maybe within the next couple of weeks, definitely in the next month or so. But there's going to be a rebound here, and I think it'll be strong into the end of the year.